Good morning, guys, and welcome back. Yesterday was an amazing day. We caught 1000 pips on Nasdaq and over 300 pips on gold. My account is up about 4% or just under 4%, equals to £6,300. And to the month, this is a whopping £21,000, and it's only 9th of April. So we have more than half of the month remaining. And the narrative isn't going to change in the market because President Trump is making sure that the market and investors and traders are in fear. We have news about the escalation of trade war and tariffs every single day. But of course, there are important things and not just the tariffs which moving the markets. Markets move for a reason, and I trade the reasons. This week we have so many other important events. Tonight, for example, the FOMC meeting minutes, which is going to tell us key information whether the Fed and Jay Powell is ready to submit to Donald Trump's obey or demands to cut interest rate. Then we have the most important inflation data, which is going to be CPI for the United States of America. And on Friday, the US market is going to start or kick off the earnings season with big banks reporting. Just to look at the markets, you can see that gold is currently trading around $3,000, rebounding a 1% from the previous lows. Now, safe haven demand is returns as the trade war intensifies. Technical support near the 3,000, holding strong, eyes on 3,050 if the tensions persist. If you look at the US indices, S&P 500 is down about 1.4%, breaks key technical support. If you look at Nasdaq, 1.6% as tech stocks read from global supply chain fears. The Dow Jones is off about 0.79%, cushioned by the defensive stocks. So you can see the difference between index and index, stock and stock. There are defensive stocks which are doing pretty well amid the tensions of the global trade war. And if you look at the general macro key drivers in the market, obviously Trump imposes 104% tariffs on Chinese imports, but then China retaliates immediately, raising the stakes in a renewed trade war. And if you look at the 10-year Treasury yields, you see that there was a massive rally last night, which contributes to many factors I'm going to explain later in the video. To summarize everything up, USD is weakening, stocks are down, and volatility is surging. What are they? If you need help navigating through this market volatility, go to alphafx.eu and sign up, and you get access to all of my trades with market analysis on a daily basis, morning briefings, and live trading. Remember that markets move for a reason, and I trade the reasons. Let's start the analysis by looking at macroeconomics first. Now, this is a top-down approach that I use, looking at the big picture first, then moving on to fundamentals, and then using technicals to determine entry and exit levels. As I mentioned at the beginning of the video, the narrative isn't likely to change this week or this month. In fact, until midsummer. President Trump is definitely taking the stage with the tariffs. President Trump is doing this whole tariff thing to refinance his $6.5 trillion debt in June or by June. So it's guaranteed that this tariff war is going to go on at least until June, until the Fed is taking action and cuts interest rate if it cuts. This leads to the second point I want to discuss with you. Now, today we are going to have FOMC meeting minutes. Those of you who don't know what's FOMC meeting minutes, it is a very long 17 pages dry document full of macroeconomics. The Fed is talking about the financial situation of the US, about the economic situation of the US, about the general outlook of the US and the macroeconomics or economic outlook. Now, this document, it's impossible to read it. Even seasoned traders, it took about 30 minutes to read and understand what they write. Thankfully, we have ChatGPT, and I'm going to tell you a secret. Many of the traders now taking advantage of the technological development. So start a folder or a new project in ChatGPT and feed in, let's say, the last 3, 4, 5 or how many previous open market committee minutes or FOMC meeting minutes into ChatGPT. And as soon as this data or this document comes out on the Federal Reserve's page, let me just show you where you can find it. So you go to Federal Reserve. you can access this website straight from investing.com. So click here down Federal Reserve, and then it will take you into this page. And on the right hand side, you see the last meeting minutes was in January, and you want to click on the PDF file, and then you will get this document. Download it and feed it into ChatGPT, and make sure that you give the right prompts to ChatGPT. For example, ChatGPT, compare the current document to the previous documents and tell me what you see. Will the Fed increase interest rate? Will the Fed cut interest rate? What can we expect? How did the narrative change? How did the tone and the wording change from between this document and the last God knows how many? And to try to play with the prompts beforehand the actual document is being released, because when it's released you won't have time to start testing and playing around with ChatGPT. So you want to make sure that you are ready with the prompts as soon as the document comes out, and you want to feed in as soon as it comes out. And that is going to determine whether, gold is going to go up or down, as well as indices. There are talks currently that the Fed is going to force into an emergency interest rate cut, but I don't know how accurate are the sources. I doubt that the Fed is going to take the knee for President Trump, because if the Fed loses credibility, then the market is going to laugh at the Fed in the future. And then going back to the economic calendar, you can see that this week we also have CPI for Thursday. Let me just find it. So tomorrow, which is going to be Thursday, the 10th, we have the US CPI data. Now, I think that the CPI data is way more important than the FOMC meeting minutes, but we don't know what they're going to present in the FOMC meeting minutes. I still believe that the CPI is going to be significantly stronger, and I will live trade it with the members. Now, before the live trading session, I usually send out a analysis to the members. This is the paid Discord channel. This is the VIP, whatever you call it, the lounge. And I send out analysis and information about my trade. So if I enter into a live trade, I send out, let me just show you, a signal like this. So first I send out the macroeconomic analysis or the reasoning, then I send out a screenshot of my MetaTrader or TradingView, and then I send out the exact details of the trade I entered. Now I use ChatGPT as well to quickly, just type it out, my positions, and I immediately send it out to the team. So literally, if someone follows the channel or enables notification, is able to follow my trades literally live. If you want to join the AlphaFX community, go to alphafx.eu. Unfortunately, the premium plan has been sold out today. I think it was Martin who purchased it, but we still have the Pro Lifetime, which is £199, and you got the monthly subscription. Now I'm going to play around with the prices, but long story short, you find the link below the video if you want some juicy signals. Go to alphafx.eu. Now that we discussed the upcoming events, there is one final thing which I did miss. It's the earnings calendar. Yes, it's that time of the year. On Friday, the Q1 earnings season is officially going to start with the big financial companies reporting. JP Morgan, Morgan Stanley, all the big boys are going to report their numbers. And the numbers itself, it's not that important. What's important is the earnings call. Now, during an earnings call, the CEOs of these companies or the chief financial officers of the companies are going to discuss, past performance, how was Q1, and also they're going to give their view about the future. And since we know that the markets are forward looking, these guys are going to shape the market. And if they say things like, well, we don't have confidence in the near-term future because of the tariffs, and we expect a massive pullback on the markets, a slowdown in growth, GDP, then the markets are going to definitely crash, especially indices. And this could be an opportunity for gold. Let's move down to the technical analysis. Now, yesterday we did catch this nice 300 pip move to the downside, and you can see that the market is already created what it looks like a triple bottom. But is it really a bottom? Who knows? What I see is gold is definitely still in a downtrend, because every asset class in the world is selling off right now. Cash is king, so all the traders and investors are running to cash, but they can't hold it or can't keep up with this cash hoarding, because some of the funds have a mandate to, no matter what, but they have to invest the money. So they can't hold the cash idle, they can't hoard the cash, they have to invest it in somewhere. And long only funds, for example, they have to buy. They're not allowed to sell. It's only the absolute return funds which are allowed to sell, but even then they have a very strict mandate. And many of the funds, they're not allowed, many of the hedge funds and funds are not allowed to hedge against market volatility. So they have to simply just buy. And I think that's what we see on the Nasdaq right now. What I'm going to speak is this bounce back from this support at 16,700 or 500. But let's go back to gold and let's analyze it first. So what I see is that gold obviously sold off from the previous all-time high at 3,167. Crazy number to say out. It's sold off, and we have a triple bottom. Remember, we talked about the macroeconomics and the fundamentals, but today there's nothing in the calendar, so I'm going to put more emphasis on the technicals, which I don't really like. But what it looks like is a triple bottom. I never trade triple bottoms, but it did work perfectly. We have a bounce back up, and now we need to determine whether gold is going up or down. From the previous market sell-off, I would say that the market is going to continue to sell off, all the risk assets and even the safe haven assets such as gold. And from this perspective, what I see is we have a strong resistance level at 3,073. And if I put a nice line over here, you can see that the previous lower high or lower low, pretty much basically the previous support and resistance lines up with the Fibonacci, the weekly pivot. And if I pull up my magic Fibonacci from swing high to swing low, you can see that this lines up, or I already have it. This lines up with the Fibonacci 50%. So I have a free confirmation that this is going to be a nice sell zone right here. Let me just put it up on the chart, and I'm going to write out this is going to be a sell zone, a potential sell zone. Wonderful. Okay, so I will be looking for sells between 3,090 and 3,060. So I know it's a wide range, but look at the moves that the market is creating. Literally what you see on the chart are thousands of pips on gold because the market volatility is so high. Okay, so that's enough. I don't have any open positions on gold. You can see that this is my MetaTrader. Account is currently up at 176,000, and I don't have any open positions on the market right now. The next thing I want to discuss is Nasdaq. Now, yesterday we managed to catch this nice 1,000 pip or 1,000 point drop on Nasdaq from the sell zone to the bottom. It's very similar to what I'm expecting on gold. Maybe there was a correlation. Right now, what it looks like is that Nasdaq already created a support and a resistance from the sell zone, and it could be very much a bear flag which is incoming. So what it looks like, let me just pull up my flag. What it looks like, it could be a bear flag. Now, bear flags usually react to the 50% Fibonacci. So we get the Fibonacci from swing high to swing low, and guess what? The Fibonacci 50% lines up almost exactly to the weekly pivot, almost exactly to the previous sell zone. So what I'm expecting is before the FOMC meeting minutes and before the CPI, I'm expecting stocks to rebound, and it looks like that, the fears in the market is vanished, and investor confidence came back. But that is going to be the trick. That's going to be the market manipulation with the evil market makers trying to take your $200 account. So it's the same scenario or reverse compared to gold. I'm expecting price to come a little bit higher, maybe today's market open or maybe tomorrow. Everyone starts to buy, but I will be looking for sells, and my ultimate target is going to be, let's see, where should be the ultimate target? Below 15,000. Yes, on Nasdaq, I'm looking for sells, and the target is below 15,000. Let's call it 14,500. But where am I going to start selling off? Well, maybe it's a bit premature because this flag hasn't finished yet. So I'm going to set an alert to around 18,000. Let's call it 18,000. I'm going to set an alert. You can do automated alerts in TradingView if you didn't know. So I don't have to, waste time. Also, you can add alerts on trend lines. If I put a line here, this red line, right click, add alert on the trend line. You can see this one here, add alert, zoom out, and I can set an alert on the trend line. So once the chart or once price touches my trend line, you can see that there is a little clock right here. And there is an alert on this trend line right now, and I hope it helps. It's a wonderful tool. So just to recap, gold, I'm expecting a little bit higher prices, but continue to sell. And on Nasdaq, exactly the same scenario. I'm expecting price to go a little bit higher, trick everyone in, and then continue to sell off. Now, once again, if you want to trade with me, go to alphafx.eu and take advantage of the last free memberships available. Thank you so much. This is the Alpha FX.